Welcome back, and joining us on the show now is Peter Mcguire. He's CEO at Exim Australia. Peter, hi, good to have you. And overnight has been good for the crude oil prices, more than 2% of gains coming in. And then there are, of course, conversations about those sanctions on Iran entities and vessels. How sustainable do you see the crude oil prices? I mean, this year is into negative, and do you think much would change for the month of December to make any gains here at all?
Well, good afternoon, Manisha. I think a couple of things. First off, if you look at volatility over the last month, it's really cratered. So there's the first part across the crude complex compared to other markets, of course. So I think that probably I wouldn't be surprised to maybe a little bit of a leg up from here, maybe another couple of percent over the rest of the week. You've got to take on board also what's happening as far as OPEC and the whole fabric, geopolitical concerns running into the storyline. So yeah, maybe a couple more percent and keep an eye on it over the next, week or so. There's going to be good opportunity for trading, I'm sure.
Yes, absolutely. Peter, I was reading various reports because most of the Wall Street banks and brokerages have until now come in with their forecast for 2025, and 60 is what Citi says, Bank of America says 65, then you have 73 from JP Morgan. The most bullish really comes in from UBS at 80. Otherwise, it really is between 60 to 75 for most of them. But 60 to 80 in that sense also is a big range. What's your sense? Where do you see Brent averaging for the next year?
Well, I think you've got to be in that band, Manisha, and the other side of it, of course, is the President Trump initiative as far as drill, baby, drill. So what that's going to do to the market and what's it going to do naturally to OPEC and to other, big producers. So unless you see something dramatic happen from a geopolitical stance or weather outages, that's where you might see a further spike to the upside. But President Trump has said that he wants cheaper energy prices. I'm not sure what Saudis or the Russia contingent are going to think of that, or naturally the other OPEC members, but he's producing 22 million barrels a day. He wants to take that up to possibly 25 to 30 million barrels a day. So, yeah, it's going to be a very, again, interesting first half of 25, Manisha.
Oh, well, absolutely. So how do you see the second year then? Would you break it into two halves, first and the second one? When do you see prices settle? And if it is the first half that we're talking about, then where do you see the crude prices going?
Well, I think I've got to be in that same bandwidth as far as 60 to 80. I know it's a fairly widespread, but, as well as I do, you can really see it oscillate between those 2 points. And you've got to give it, we've got to see what happens and how quickly President Trump turns the engine on. And yes, I think the year's got to be very much a first half and a second half. And do we see geopolitical concerns re-enter the market? What happens as far as Russia and Ukraine? The Israeli situation and naturally in the fabric across the Middle East and Iran. So yeah, it's going to be, I think price volatility will come back, and I think it's going to be again a dynamic market to be a part of.
Well, yes. Peter, almost every of my commodity guests, I'm asking this question on what is their top commodity that they would want to recommend for 2025. And until now, it is silver, which is topping the list. What's your sense?
I think it's got to be silver, Manisha. I've said that, a long time. The reason is I think it's undervalued. If you look at the gold to silver ratio, it's been crushed. Underinvestment for the last 2 decades across the whole complex. And I remember the storyline, what Jim Rogers used to say 20 years ago to me, silver, it's going to be it's time to shine will come. And I think it's time to shine will certainly be next year. And we're not very far from the start of it. And so when we look at it at the moment, you're running at that $31.50, $31 sort of market. I think it's going to really take off. And I think the overall theme is going to be strong demand. Naturally, gold will lead the way, but silver will start to narrow from that, the silver ratio to gold.
What also is your sense on the OPEC meeting that comes in tomorrow? I mean, is it factored in that they would perhaps postpone output cuts?
I think so. I think it's going to be probably the best, everything that I'm reading and all the analysts are saying 3 months. It could well happen, Manisha, a delay in output by 3 months. The story quite simply is they'll probably extend it out. And I was a little bit taken back. If it was going to be anything dramatic, it would have happened last Sunday. That's when the meeting was, and they pushed it back to Thursday. So I'll just wait for it to drop, and I feel as though that'll be the storyline. OPEC Plus, they'll firm up a deal, and let's see how it rolls.
Before we let you go, Peter, are you any interested in the India-Australia test match? Pink ball test is starting on 6th. My directors are really, really interested in that.
Manisha, of course I am, and we had to give you guys a start. We gave you the first start, and we let you win that 1-0, and now it's catch up. So that's how we're going to run. I don't know. If you guys played the same way you played in Perth, then we haven't got a chance.
Oh, we'd be cheering for that for sure, Peter. We hope to play the way we did in Perth. But thanks a lot for joining in and sparing time to talk about the outlook for the commodities going forward. Manisha, thanks a lot for joining in as well. All eyes on the OPEC meet tomorrow. But that's a wrap on this edition of Halftime Report. Business Lunch takes the action forward.